Very good morning, my dear students. So, you are welcome to class 11 accountancy class once again. So, we are going to discuss the theory base of accounting, chapter 2. So, last class we already discussed about concepts, correct? So, before that, here I want to quote Abdul Kalam: if you salute your duty, you no need to salute anybody, correct? But if you pollute your duty, you have to salute everybody. So, our Kalam says that so duty is very very important. So you have to work accordingly. Okay. So here that's what the accounting concept discussed the previous class. So different accounting concepts. So entity, money measurement concept, periodicity, accrual, matching concept, going concern, cost concept, realization concept, dial aspect, conservatism or prudence, consistency, and materiality. Correct. So different type of accounting concept we discussed. For today, we are going to discuss very important one: system of accounting. The system of recording transactions in the books of accounts is generally classified into two types. Okay, the first very very important one, double entry system. That's what we're going to discuss in future classes. Okay, so double entry system is a very very important one. So as you know already, double entry system is a modern accounting system. It's based on double entry system, which is based on the fundamental accounting equation, correct? It's nothing but assets is equal to liabilities plus equity. So the double entry accounting system ensures that the accounting equations always remains in balance, correct? So debits must be equal credits. As you know already discussed in the first class, who is the introduction of double entry accounting? Luca Pasoli, developer of double entry accounting, it's a father of accounting. Okay, so double entry accounting is based on a simple concept. That is nothing but each party in a business transaction will receive something and give something in return. Right. So in bookkeeping terms, so what is received is a debit and what is given in a credit. The T account is a representation of a scale or balance. See here the scale mentioned here, scale or balance. Receive debit and give credit. Similarly, a T form of account, left hand side receive debit, right hand side give credit. So detailed discuss in this class the meaning of debit and credit and everything. Here we are going to discuss how they are writing accounts. First one is double entry system, correct? So double entry system, it recognizes that every transaction has a twofold effect. That's what discussed now. The method of writing every transaction into two accounts. Of these two accounts, one account is given debit while other one is given credit, correct, with an equal amount, so that the accounting equation is always in balance. So on any date. So nothing but total debit is equal to total credit. That's it is called double entry system. So every debit aspect correspondingly there is a credit aspect. Okay, the second one is single entry system. So what is the meaning of single entry system? Single entry systems record transaction with a single entry and only maintain one side of every transaction. That is nothing but only cash transaction and personal transaction. That's why it is called single entry system. It will record incomplete transaction. Correct. That's what the single entry system. So first one is double entry system. Second one is single entry system. So mainly we are going to discuss double entry system. Correct. So here what is the difference between single entry and double entry? Here single entry is what? Incomplete records. Okay, so only we maintain cash transaction only. But here double entry, both cash and credit transaction. As we do the business, both cash and credit. That's why here double entry complete records. We mentioned cash and credit transaction. Then under single entry, statement of profit and loss in prepared to calculate profit, just to calculate profit. But here the trading and profit and loss is prepared in order to ascertain the profit and loss of business. Okay. Here we will learn later on the meaning of single entry. Under that, statement of affairs is maintained. Here we will call balance sheet. Okay. Then here two aspect of transaction is not recorded, correct? So only the cash basis. But here two-fold aspects of each and every transaction is recorded. That's what debit and credit. Every giving aspect, receiving aspect. Similarly, it's adopted by small scale business, like for example, potty shop, sole trader, like that. Mostly they will follow single entry. But adopted by large scale business for double entry. So double entry system is best for the large scale business, correct? That's why difference between single entry versus double entry, correct? Then the next discussion is very very important. Accounting basis. So what is the meaning of accounting basis? We are basis of how we are accounting. So one is cash basis accounting. Other is accrual basis accounting. So here the cash basis accounting, accrual basis accounting, both together, cash flows and revenues, expenses recognition. But the cash basis accounting at same time, whenever you receive cash, then only you go into account. But here it may different time. So here see cash basis, you don't recognize your income until you have the cash in your hand. So bank account, correct. So any transaction when you got money, then only go into record. That's what is called cash basis. But accrual basis, once you recognize the income, the instant it happens, whether you have the actual money yet or not, whether you received money or not, once you recognized as income, as a revenue, you want to account it, correct. That is called accrual basis, correct. So record income when you receive it, coming under cash basis, record an expense when you pay it, that is coming under cash basis, correct. So what is the difference between here also, what is cash versus accrual accounting? Nothing but see here, the difference between cash basis accounting and accrual basis accounting. Here the cash basis, revenue is recorded when cash is received, but in accrual basis, revenue is recorded when it is earned. Okay, so any goods just you sold, whether you received money or not, you want to account. Similarly, any expenses you have to pay or not, you have to account the accrual basis, correct. So expenses are recorded when cash is paid according to cash basis. But here accrual basis, expenses are recorded when incurred. Okay, so a cash basis is not allowed under GAAP, generally accounting policies. Here GAAP, it is not allowed, but here generally used by larger business, correct. So that's why keep in mind that the accrual basis is the preferred way to do accounting, and it is required by GAAP, correct. So that's what accrual basis is very important when compared to cash basis, correct. So again, so what is cash basis? Once you received money or you have paid, you have to account. But accrual basis, whether you received or receivable, whether you paid or payable, you have to account. That is called accrual basis, correct. Then next one is going to discussion the meaning of accounting standard. Here what is the meaning of accounting standard, correct. So as accounting, you have to follow some standard, some uniformity, rules and regulation, correct. So a standard means generally accepted model or an ideal. It is accepted for global or universal, correct. Thus accounting standard means generally accepted accounting principles, correct. The accounting standards are written documents containing the generally accepted accounting principles, correct. That was GAAP, issued by ICAI. What is ICAI? Institute of Chartered and Accountants of India, in India. There are totally 32 accounting standards is there in India as on date. So what is the main objectives of accounting standard is to standardize the different accounting policies and practices followed by different business concerns. So you have to follow the accounting standards, uniform rules and regulation. That's why all the companies, they do business in a uniform way, easily understood by the external user, internal user, correct. So any company, they simply they follow their own rules and regulation. It's very difficult to understand by the internal and external user. Okay, that's what here. What is the objectives of accounting standard? Again, the basic objectives of accounting standard is to remove variations in the treatment of several accounting aspects and to bring about standardization in presentation, correct. So standardize the accounting policies. So you have to standardize the accounting policies for the framework, rules and regulations. Okay. So add the reliability to the financial statement. So eradicate baffling variation in treatment of accounting aspect. So we have to avoid the unwanted variations whenever you're treating the accounting transaction. Okay. So it facilitates the intra-firm and inter-firm comparison. So they are nothing but company to different companies are the same sister concern, correct. That's what the main objectives of accounting standards. So accounting standard in India, the Council of Institute of Chartered Accountants of India, that is what ICAI, constitute the accounting standard board, nothing but ASB. Simply short form will say Accounting Standard Board in April 1977, which performs the functions of preparation of the accounting standard in India. So the ASB comprises representative from industries, the Central Board of Directors, that's correct, CBDT. So the Company Law Board, the Controller and Audit General. So these are the comprises of the accounting standard board. Who are the participant person? So one is Central Board of Direct Taxes, then Company Law Board, and the Controller and Audit General. Correct. In India, the Controller and Audit General will audit all the government accounts. Correct. So all are together under the Accounting Standard Board. They consist of. Correct. That's what ASB. Okay. Then. So what are the list of accounting standards? Here totally 32 accounting standards are there. See here, what is AS stands for accounting standard. So one stands for disclosure of accounting policies. That's what framework of our treatment of account policies. Follow the methods, correct. So for example, any depreciation method, so we have to follow which method going to follow every year, correct. So different policies framed by the accounting standard, the company has to follow uniformly all over India, correct. That's what AS1. So what is AS2? Accounting standard valuation of inventories. To how to calculate stock, like opening stock, closing stock, correct. So what way they are going to calculate, whether it is cost, whichever cost or market value, whichever is less. So later on in your future higher classes are going to study detailedly what is valuation of inventories. Then accounting standard 3, in your second year, +2, are going to study cash flow statement. That's what AS3, accounting standard 3. Then fourth one, AS4, contingencies and events occurring after the balance sheet. Okay. So sometimes whether events may occur or may not occur. So how we will account contingencies, liabilities after the balance sheet, correct. Then AS5, net profit or loss for the period, prior period items and changes in accounting policies. So this is discussed your higher classes. Then what is AS6? Depreciation accounting, correct. So different calculation of method of depreciation for the fixed assets, correct. Then AS7, accounting for construction contracts. Here a construction company, they have to follow accounting standard 7, how they are going to calculate their profit, correct. Then AS9, as you know already, the accounting concept, revenue recognition, correct. That's what discussed here, AS9. So they will frame the rules and regulation, how you are going to recognize the revenue. Then AS10, accounting for fixed assets, how you are going to account the fixed assets in a company, correct. Then AS11, the effects of changes in foreign exchange rates. For example, any export or import, how you are dealing with our foreign exchange. That will discuss in AS11. The effects of changes in foreign exchange, correct. So every day the foreign exchange will change, correct. It's not a constant. So accordingly, how you are going to work out our imports and exports in a business, correct. Then AS12, accounting for investments. Accounting for government grants. So as you know, what is grants? The government given grants and some aids, correct, to assist the business, to run the business smoothly, correct. That is how they are going to account. That will discuss accounting standard 12, accounting for government grants. Then AS13, accounting for investments. How we are going to account investments? They will give the guidelines. How you are going to calculate the investments, correct. Then accounting for amalgamation, AS14. So what is the meaning of amalgamation? One company will take over by the another company. That is called absorption. Here amalgamation, two existing company, they closed and to form one new company. Okay, that is called amalgamation. That amalgamation procedure, everything we will discuss, and you will, for higher classes, you will study AS14. That is called accounting for amalgamation. Then AS15, employee benefits. So the AS15 very important one. The benefits of the employee. So how they will get the salary, then provident fund, PF, then other incentives. Everything discussed here. AS15. Then AS16, borrowing cost. So for the cost of the production. So what is the meaning of here? Borrowing cost, like interest for the investment, like that, correct. Then see AS17, the segment reporting. How you are going to report? That will discuss in AS17. Then AS18, related party disclosure, like our external party, how they are going to display the report of the accounts, correct. Then accounting standard 19, leases. So what is the meaning of lease? How they will give lease? How you are going to account, correct. Then AS20, earnings per share. So any company, they will calculate their shares, how the earnings per share. So that will discuss the second year, 12+2, in accounting ratios, one of the nice chapter, AS20, earnings per share. Then AS21, consolidated financial statement. How you are going to consolidate, how you are going to present the financial statement, like a trading account, profit and loss account, balance sheet. Future you will learn the meaning of this financial statement. That will discuss here, AS21. Then AS 22, accounting for taxes on income. So all the company, definitely they have to pay the taxes. So how they are going to calculate on income, their respective income every year, correct? So that will discuss their accounting standard 22, accounting for taxes on income. Then AS 23. So accounting for investments in associates in consolidated financial statements. So for the investment, how they'll associate, compare with the consolidated financial statement for the different sister concern. Then AS 24. For the discontinuing operation, for example, any discontinuing operation, how to follow, that we'll discuss in AS 24. Then AS 25, interim financial reporting. So how they will report the interim financial within the companies, correct? Then AS 26, intangible assets. As you know, the two type of assets, one is tangible assets, intangible assets. So intangible assets, as you know very well, you cannot touch and feel. The best example of intangible assets, goodwill, patents, trademark, know-how. So these are the intangible assets, how they are going to calculate, how they are going to account. That will discussion here, AS 26, correct? Then AS 27, financial reporting of interest in joint venture. So what is a joint venture? For the specific purpose, for the specific period, they have to work together. That is called joint venture, correct? For the particular period. That will discuss here the financial reporting in accounting standard 27. Then 28, impairment of assets. So any defect of the assets or for the damage of the asset, how they have to account. AS 28, impairment of assets. Then 29, AS 29 is a very, very important one. Provisions, contingent liabilities and contingent assets. Say provisions, you have to provide for the future, correct? What is contingent liabilities? See, it may occur or may not occur for future purpose. For that, you have to reserve some money, correct? The contingent liabilities and contingent assets. And similarly, AS 30, financial instruments, recognition and measurement. So how to measure the financial instrument, correct? All AS 30, 31, 32 are related financial instrument, the presentation and disclosure, correct? That's why the accounting standard 1 to accounting standard 32, all they clearly mentioned in Institute of Chartered Accountants of India, clearly mentioned totally 32 list of accounting standards, correct? Then, the purpose of accounting standard board. The purpose from accounting standard board. What is the purpose behind for that? So this statement of principles for financial reporting sets out the principles that accounting standards board believes should underlie the preparation and presentation of general purpose financial statement. The second primary purpose of articulating such principle is to provide a coherent frame of reference to be used by the board in the development and review of accounting standards by others who interact with the board during the standard setting process. Okay, that's what the purpose behind the accounting standard board. Such a frame of reference should clarify the conceptual underpinning of proposed accounting standards and should enable standards to be developed on a consistent basis by reducing the need to debate fundamental issues each time a standard is developed or revised. Okay, sometimes you want to improve the standards or develop the standard or revise the standard accordingly day-to-day activities. So that's what the purpose from ASB Accounting Standard Board. Okay. Then we're going to discuss, it's very important one, international financial reporting standards. So the international financial reporting standards. So see, it is internationally discussed. Financial reporting standards, how they will report, correct? So see here the map, the diagram will, you can able to understand international, the financial, the reporting, how you are going to report according to our standard ways, correct? So here the, what is the meaning of that? So international financial reporting standards, you can say IFRS, are designed as a common global language, correct? So global language for the universal, for a business affairs, so that the company accounts are understandable and comparable across international boundaries. For any export and import, for dealing with different outside the country, for our foreign countries, you have to understand the language, correct? That's why the common global language for IFRS, International Financial Reporting Standards, you have to follow. So they are consequence of growing international shareholding and trade and are particularly important for companies that are dealing in several countries, correct? Some foreign countries. Whenever any export or import, you have to follow some common language. Then only both the country can be able to understand for business dealings, correct? So IFRS were issued by the Board of the International Accounting Standards Committee IASC, known as International Accounting Standard Board, IASB. So earlier we discussed the ASB, here International Accounting Standard Board, correct. Then, what are the list of the IFRS they given? Here totally 9 list. IFRS 1 stands for first time adoption of International Financial Reporting Standard, that is 1. So 2 stands for share based payment. Okay. 3 stands for business combination. 4th stands for insurance contracts. 5th stands for non-current assets held for sale and discontinued operations. Then 6th, IFRS 6th stands for exploration for and evaluation of mineral resources. Okay, so mineral resources, very, very important one. Then IFRS 7 dealing with financial instruments, the disclosure. Then IFRS 8 operating segments. Then IFRS 9 financial instruments. These are the IFRS 1 to 9 discussed for the internationally financial reporting standards. Okay, then what is IAS? Here IAS means International Accounting Standards. Okay, that is very important. Okay, totally 41 IAS given, International Accounting Standards. But here some important one mentioned here. Here 1 stands for IAS 1 stands for presentation of financial statements. Then 2 stands for inventories. So earlier we discussed the accounting standard. There inventories 2, here IAS 2 inventories, correct. IAS 7 cash flow statement. Earlier discussed accounting standard 3, but here IAS 7 cash flow statements, correct. Then 8 accounting policies, changes in accounting estimates and errors. Then 10 events after the balance sheet date. Then we have discussed that there construction contracts here IAS 11. Then 12 stands for income taxes. 14 statement reporting. 16 property plant equipment. 17 lease. 18 revenue. Here also 19 employee benefit. 20 accounting for government grants and disclosure of government assistance. So here also the effects of changes in foreign exchange rates. Earlier discussed accounting standard 11 there, here 21. The effects of changes in foreign exchange rate, correct. Then 23 borrowing cost IAS. Then international accounting standard 24 related party disclosure. Then accounting reporting by retirement benefit plans under 26. And 27 stands for consolidated and separated financial statement. Then 28 investment in association. 29 financial reporting in hyperinflationary economics. Then 31 here also discussed interest in joint venture. 32 stands for financial instrument presentation, correct. Then 33 there also discussed accounting standard earning per share. Here IAS 33 dealing with earning per share. Then 34 interim financial reporting, correct. Then 36 impairment of assets. Then 37 there are also provisions, contingent liabilities and contingent assets. 38 intangible assets. 39 stands for financial instruments, the recognition and measurement. Then 40 IAS stands for investment property. Then finally the very important one, international accounting 41 deals for agriculture. Likewise totally 41 numbers are available. Only the important numbers are discussed here. So IAS stands for International Accounting Standards. Okay, then we're going for the GST. As you know, now in India, the GST is very, very, very important one, correct. So what is the meaning of GST, correct? It's nothing but goods and service tax, correct. The goods, any goods for dealing. Then services referred by the person, correct. See here, the GST meaning. The GST meaning, the G stands for goods, S stands for services, T stands for tax, correct. So GST is a comprehensive tax levied on which is levied on production and trading goods and provision for services also. So all three together as a production point of view and trading, buying and selling and service provided, correct. So GST is a tax on a value addition made at each stage and benefit of set off will be continued from manufacturer point of view and service providers up to retailers, so that ultimate consumer should bear the tax, correct. So what is the tax? When you're going to buy any product, you have to pay tax. So tax is inclusive. So okay, so here that's what all the tax together, the goods and services together, we call it here GST, good service tax. There are two types of GST in India, correct. One is under dual GST system, central goods and service tax, correct. that is called CGST. CGST, nothing but Central Goods Service Tax. What is SGST? That is State Goods Service Tax. Okay, charged by the central and state respectively on the transaction of goods and services. There are two types of GST. One is centralized GST and state GST. Correct? Then, what is the features of GST? It's a very important one. So GST is applicable on the supply of goods or services. Correct? Then a destination based on consumption tax. Destination, finally we have to pay tax as a consumer point of view. There is a levy on value addition at each stage. So whenever value added, naturally the tax they calculated. So dial GST with the center and state simultaneously levying it on a common tax base. Correct? So GST levied by the center would be called central GST, and similarly a state, suppose levied by the state, would be called state GST. Correct? So GST would apply to all supply bearing a few to be specified. That's what the features of GST. Then, what is the GST objectives? So, main objective. The objective is very important. The objectives of GST, correct? So, one country, one tax. So, all over the India, all over the country, only one tax. No confusion about different type of tax, correct? So, earlier you paid different tax in a state wise, correct? So, now everything, one country, one tax. That is the idea here. That is what the objectives of first GST. Then, consumption based tax instead of manufacturing, correct? So instead of manufacturing, whenever any buyer consume the product, they have to pay tax instead of manufacturing. Earlier different tax of their excise duty, correct? Like that. Here uniform registration. So common registration for all, like payment and input credit. So this what is input credit? You will discuss later on. Here just your idea. What's the meaning of GST? What is the objective and features? Correct. So to eliminate the cascading effect of indirect taxes on single transaction. So unwanted tax paid by the consumer, the burden on number of taxes. That's what the eliminate the very important one, cascading effect of indirect taxes on single transaction. So subsume all indirect taxes at central and state level under reduce tax evasion. You have to avoid tax evasion and corruption. That is very important one. Then increase compliance. Then reducing economic distortion. That is very important. Correct? Then, so that's what we discussed today. It's a very important one. So different. Last class we discussed the concept. This class very important one. We discussed two type of system. So one is double entry system and single entry system. Then how you are going to account like cash basis and accrual basis. Then accounting standard, totally 31 accounting standard. The international accounting standard, that's what list of standards discussed. What is the meaning of accounting standard? Then what is the meaning of GST, the purpose of GST, the objectives of GST, correct? And you that finally here, see here, it's a very important quote. So begin every good businessman, definitely there is a great accountant, correct? So that's what we are going to study the accountancy subject, very important for the day-to-day purpose also. Accountancy is very important, correct? Okay. So I hope that you understood this video. So thank you very much for listening and watching. So hope you liked my presentation. So you have to work out the worksheets, correct? Later on. Thank you.